Hello there and welcome back to my YouTube channel. James here as ever for today's video all about ACCA Financial Management. It's lecture 2 in the 8-part series, and in today's video I'm going to take you through the financial management environment, a key area especially if you've got your upcoming financial management or F9 paper. If this is the first time you visited my channel, my name is James. I'm an ACCA qualified member from the UK, and on my channel I help out ACCA students around the world pass their upcoming examinations. And today is no different, because I assume by you clicking on this video you have your upcoming financial management exam and you want some help to get you over that line, to get you the 50 plus and to pass. Well, all of my videos are 100% student led, and it comes from the comments and lovely feedback that I get. So recently, if you have a look at my first video, I put up a poll on my Instagram, and as you can see up here, because I'm getting marvellous at the editing now, Adam kindly got in touch and he is super duper keen for some FM or F9 materials to go up, and trust me Adam, I've got this uploaded for you as soon as I can, my friend. So this video is dedicated to you. If this is the first time you visited my channel, feel free to subscribe so you get access to all of my free materials. And whilst you're down there subscribing at the bottom, feel free to give it a massive thumbs up and like so that more ACCA students can see the free materials that I post out as well. If you've got any questions about financial management or ACCA or anything else, feel free to leave it down there. I answer absolutely all of them, and I'm more than happy to help on top of that. Well, without any further ado, let's get stuck into lecture number 2 on 3, 2, 1 and go. Hello and welcome to lecture 2 on ACCA's financial management exam. That's the F9 paper. My name is James, and in today's lecture we're going to be going through financial management and the environment itself. There are 3 key areas from the ACCA syllabus that you need to be aware of for your upcoming financial management exam, and these include, as you can see on the screen on here, the economic environment for business, the nature and role of financial markets and institutions, and thirdly, the nature and role of money markets, all critical areas that you need to be aware of ahead of your upcoming financial management exam. Well, coming on to the first area, we have the economic environment for business itself. And the first key area on here is actually identifying and explaining the main macroeconomic policy targets. So the key elements you need to be aware of from this point here are, well, when we refer to macroeconomic policy targets, that's from a wider perspective, where the opposite or the inverse of that would be the microeconomic policy targets. So when we say micro, we think of a small condensed area, maybe it's a local regionalized area, versus macro, that involves the whole country in itself. So that's really key about identifying in the scenario potentially that you could be asked on the exam, and then considering and thinking about it from a wider perspective as to the decisions that the government may be making and the impact of those policies and targets are going to have on a variety of stakeholders. This nicely links us into part B on here, defining and discussing the role of fiscal policy now. So the key things to get down here, this involves the actual government spending, so where they allocate funds, and then secondly on there, the tax policies. So potentially on there as to, well, government spending, which sort of areas or infrastructure should the funds be going into, and again, the impact according of that decision. And then from a tax perspective, well, the variety of areas that you could consider in your answers involve everything from income tax to corporation tax, value-added tax. These are a variety of aspects that the government can make a decision on to either put the tax percentage up, which will increase tax revenue for the government itself, or potentially lower it down, depending on the economic environment. This leads into the actual monetary policy as to say, well, what's the process of going through this from start to finish, from the applications, from the discussions, then the implementations. Next, we have the actual interest rate. So from the UK perspective, this relates into the Bank of England and the base rate of interest that the Bank of England would actually set. And finally on here, we actually have the exchange rate policies in achieving macroeconomic policy targets now. So this is the actual exchange rate at a particular point in time that they wish to go through, and that is the rate and the currency that the transaction would be dealt in. And again, this is where you need to get down the key words as to say, well, is the actual exchange rate appreciating in value or depreciating in value? Because that is going to have a positive or negative impact on the actual macro policy targets and the transactions that are going ahead to either benefit or worsen from the government's perspective or from the actual macroeconomic policy perspective. This nicely links us into explain how government economic policy now interacts with planning and decision making in a business. So this is critical, especially in a scenario-based financial management question where you could be tested on planning and you could be tested on decision making. So in other words, try to think about this from if you were working within a business, you were actually the finance director there, the government economic policies, how would it impact on you from a planning perspective? So again, linking back to the roles of the financial manager as to, well, how are we going to be investing our funds? How are we going to be financing? And then how are we going to be distributing? So just as a recap on there, so we've got the actual financing as to, well, what's our debt to equity balance? So the actual shareholders versus the non-current liabilities. The financing, so economic policy could interact with, do we get any tax benefits from investing in a certain amount of assets within an actual tax year? That again could benefit the business with greater cash flow. And then finally on there is to say, well, should we hold off distributing dividends to our shareholders because we need to retain the actual internally generated profits on there? To say, well, maybe we're going to need those in the future. Better to hold on to it now because of the actual economic policy the government has introduced. We need to keep hold of all the internal funds and then utilise those into the future because we're going to have to interact with what the government economic policy is to benefit us. So all relating to planning, and as we've been discussing there, relating this to decision making. But it all comes down to applying it to the scenario that you are potentially given. Looking at part D on here now, we have explained the need for and the interaction with planning and decision making in business of. So we've got on here key areas such as competition policy, government assistance for business, green policies, corporate governance regulation on there. So all fundamental areas, but again, linking into planning and decision making. So two different parts of the actual process. So from a competition policy, it's all going to depend on the actual industry and the actual sector. So is this going to be more commercial for it? Is it going to be potentially light, heating, water, whatever it may be? Does the government actually have any potential control over this? Also, it links into other key things you need to be getting down. It's going to have an impact on the population as to say, well, is this going to put up costs going forward? And this also links into other areas of financial management such as inflation and the cost of living. Also, we've got on here the government assistance for business. So that means to say, well, if a business is running into financial difficulty, is it going through financial stress? So key terms that you need to be aware of for the financial management exam involve liquidation risk on there, that the business doesn't actually have enough cash to pay its short-term liabilities. So that could be everything from paying its staff to their trade payables. And then what sort of packages do the government have in place that businesses could apply for that cash injection, most likely on those basis. We also have green policies down there to incentivise businesses, it could be, but again, it comes down to the actual scenario given as to planning or decision making. Classic examples in the past from financial management for green policies involve, they've tested in the past the actual cars that are more eco-friendly and electric because you gain the actual tax benefits from it. But then from a business's perspective, that would be, well, why would we look to be borrowing or potentially financing cars that are diesel or petrol when there's going to be particular benefits and green policies relating to low emission cars that we would look to benefit from? Again, comes down to planning, comes down to the decision making, but it depends on that scenario. And then finally at the bottom we've got the corporate governance regulation. So again, that's compliance as to, well, what are they looking in terms of, well, how should the business be operating moving forward? Are there new compliances? How is it interacting with the diversity of the actual workforce? not just from a financial perspective, but also from a non-financial perspective. There will also be potential codes that you could be referring to on here as well, but it links into a variety of different areas in terms of corporate governance, how the business actually operates, has it had any potential issues in the past involving corruption, bribery, for example, on there. And then what are the best practices going forward, as to say, well, do we actually have a lot of board diversity? Do we actually promote potential good social policies within the actual organisation? Do we have low labour turnover, so we actually retain staff long term as well? Do we have a good corporate culture? These are the different things in terms of corporate governance regulation, and it links into potential hiring, HR issues as well, that you need to be aware of from a planning and decision-making perspective of a business. Well, is the business going to be growing into the future? Do we need to be scaling back? And these are the factors that you need to be aware of. Now, secondly on here, we actually have the nature and the role of financial markets and institutions. And just breaking it down from A to D on here, firstly, we've got identified the nature and role of money and capital markets, both nationally and internationally. So again, it's going to come down to the actual question you're potentially given on this different area, but you've got money markets of short-term actual borrowing to actually inject into the private or public sector on there, versus capital markets on the other hand, where you've got to say, well, are we looking at potential stocks and shares? Are we looking to actually increase entrepreneurialness within the actual country itself? And this is where it links into nationally and internationally. So how is the country faring against others? Is the actual GDP of the country increasing in the short term, in the long term? What's the prosperity into the future? And this is where the government policy links into that. Well, is the country itself specialising in a particular area? Do they offer particular tax breaks? These are the things from a financial markets and institutions perspective that you need to be considering and aware of for your financial management exam. Coming on to part B now, we've got the explain the role of financial intermediaries on here. Sorry for my pronunciation, but putting it quite simply, or intermediaries on there. But what it means is quite simply, it's just a natural organisation or institution in the middle. So a classic example of this would be a pension provider. So you've got you as the employee over here, and then you've got the company over here who have to, by law, due to pension rules and regulations, actually have to contribute to the employees' actual pensions. So we have the intermediaries in the middle, which they will make the contributions to, and that is their actual role involved in it. So again, topical area, just make sure you can say it correctly. That's it. We carry on. It's all right. Coming on to part C now, explain the functions of a stock market and a corporate bond market. Well, this nicely links on actually to part D on here to explain the nature and features of different securities in relation to the risk and return trade-off. So key thing to get down here is that bonds are traditionally a lower risk compared to the stock market. So that's a really key aspect to get down there. And this links into risk and reward, or the trade-off. So if you're actually only wanting to take on a certain amount of risk within the bond market, so this is a loan where you get actually paid back depending on the actual length of the bond itself, versus the stock market. For example, if you're from the UK, that could be a FTSE 100. So that's an index where it takes the top 100 companies within the UK, and companies can fall in and out of that 100, but these are publicly listed companies, PLCs. From a US perspective, they have the S&P 500, exactly the same principle, top 500 in the US. It's the biggest market in the world, and if you're the 500th company and you potentially fall out of it, well, there are companies below that will take your place, and this is the benefit of the stock market. But coming back onto part D on there, in terms of risk or return trade-off, the stock market is definitely riskier than the bond market as well. And this is where the nature and features of those different securities come into it, as to, well, are we getting paid dividends from our stocks, or are you receiving a coupon or actually a rate in return of interest from our bonds, which are more secured? So these are the key things in terms of the nature and the role of financial markets and institutions that you need to be aware of, explaining the functions of it and how does it relate to risk and return, because you may actually have a client who in their portfolio may want a more sort of highly riskier portfolio. Well, then you'd go for a highly more percentage wise of more stocks compared to bonds, versus if you're actually approaching retirement, then you're more than likely going to be having more bonds which are more secure, you've got a more secure income from it, and then only having limited stocks as a result. Just to give you a few examples of how it works in practice. Now, coming on to part 3 now, we've got the nature and role of money markets on here. So describe the role of a money market in providing short-term liquidity, as they do, to the private sector and public sector. So this relates to, do they need a cash injection on a short-term basis, potentially again relating it back to that role of the financial manager to make a potential investment in a potential asset that's going to generate economic benefit to the organisation, whether that's in the private or public sector. It could also be used, the cash injection from the short-term liquidity, to make any short-term payable payments that are needed. There could be other liquidation issues. So it just builds it into providing short-term trade finance in order to potentially keep the firm or a group of firms within the particular sector who are in need of that cash injection. So seasonality could come into this as well, where you get peaks and troughs throughout the year, and this is where the money markets can come into play. We've got thirdly on here, allowing an organisation to manage its exposure to foreign currency risk and interest rate risk. So when you see foreign currency risk, the key things that you need to be aware of are, first of all, is it appreciating or depreciating in terms of the actual currency? Because you've got to decide in the actual scenario that you're looking at, how many companies do they trade with, where are they located, what are their currencies, and then how much, next key word to get down is it fluctuating as well, because that can have a positive or negative impact on your revenue at the end of the day. That's the bottom line, that are you going to be better or worse off, because we've got to manage that exposure to it. Also relating into hedging, which we'll touch on later. Then we've got for actual interest rate risk on here. So again, it comes down to the actual terms and conditions of what sort of contract you've actually agreed to go into. So it could be potentially with a bank on a loan or a potential debenture. And is it actually a fixed or is it variable? These are the key things that you need to be aware of from a financial manager perspective, and that you'd need to look at in the scenario itself. Coming on to part B now, explain the role of banks and other financial institutions in the operation of money markets. Key thing to be aware of here is always about the actual availability, so linking into the role of the banks. Also, availability in terms of the funds that the banks have to them, but then also the individual or the company or the institution, what is their track record or what's their previous experience with financial institutions or banks in their actual short-term liquidity processes in the past. So have they potentially missed payments in the past that could negatively impact on them actually achieving future finance? Could that put up the interest rate for them? Because at the end of the day, the financial institutions and the banks are looking at the likelihood that they are going to be repaid back those finances. Think back to the financial crisis of 2008 as an example to go away and research in regards to this. Coming on to part C now, we've got to explain and apply the characteristics and role of the principal money market instruments. So key note to get down here, if you haven't already, make sure you've had a look on ACCA's website at the technical articles, because these are 3 areas that can be actually tested from a technical article perspective. Make sure you've read the up-to-date ones, because they can, as you can see on here, consider the interest-bearing instruments. So this is where you actually gain a small return or an actual coupon based on the instrument itself. So this is relating to securities that we're looking at here. Versus, on the other hand, we have the discounted instruments. So again, relating to securities, again, the derivative products, but on this one, it's actually no income is received until maturity. Finally, we have the derivative products. So linking into forwards and futures and options. This can also link into foreign currency risk that we touched on earlier, because maybe you actually want to have a forward contract or a future contract at an agreed exchange rate price so that you are comfortable with the levels of risk. So if it was to fluctuate one way or the other, you could win, you could lose, but you are actually hedging your risks and reducing the exposure to the risk as well. So key areas to be aware of, but make sure you've got written down in your notes to go and check out and have a read through the ACCA technical articles. So just to recap off after today's lecture 2 for the financial management environment, we've considered the 3 areas of the economic environment for business, the nature and role of financial markets and institutions, also to get noted on that how it links into the role of the financial manager, and thirdly the nature and role of the money markets itself. Thank you very much for listening. Well, Adam, and everyone else watching around the world, I'm sure you've got plenty of notes going through the financial management environment lecture. I really hope the tips will be really helpful, along with all of the article links I've put in the description to this video. If you did find the actual lecture slides helpful, along with all the free information, please feel free to give it a massive thumbs up and like. I really appreciate it, as it helps more ACCA students see my free content, and I really appreciate the support, to be honest with you. Also, whilst you're down there, if you've got any questions or anything that's come to mind from the lecture you weren't particularly sure about, leave me a comment below. I'm more than happy to help, and I answer absolutely all of them. Whilst you're down there, as ever, feel free to subscribe so that you get access to all of my free materials, and you'll see all of my future uploads as well. You'll get first dibs on it. How about that? Well, the final thing I can say is I've left a couple of videos here along with all of the financial management videos that I have available on the channel, so make the most of them. They're definitely going to help. But as always on that bombshell, I'll see you next time. Cheers!